It's a rather wet start to the trading week here in London, but nonetheless, markets striking a bit of a brighter tone this morning, continuing with that steadier sentiment that we saw towards the back end of last week, spurred on by dovish remarks from New York Fed President Williams on Friday, who said that he still views room for a rate cut in the near term. Markets have subsequently repriced in a dovish direction. Around about last Thursday after the jobs report, the USD curve pricing about a 40% chance of a December Fed cut. Money markets now pricing that at about a 75% probability. The bet there being that John Williams is not only one of the more influential members on the FOMC, but also that he is seen as a proxy for how Chair Powell is likely to be viewing things, and potentially even got a nod from the main man before making those remarks at the back end of last week. In any case, stocks did end last week lower, the S&P having its worst week since October, the Nasdaq having notching a third straight weekly decline, and it was a bit of a sea of red here in Europe as well if you look on a weekly basis. But nonetheless, the fundamental equity bull case remains a pretty solid one, with the economy resilient, earnings growth still robust, and the monetary backdrop growing increasingly loose, and of course a calmer tone continuing to prevail on the trade front. In terms of the week ahead, it is obviously a holiday-shortened week for financial markets. The US are away for Thanksgiving on Thursday, and pretty much everyone in the States will be away on Friday as well. As a result, everything is condensed into the first few days of the week. On the data front, the highlights come on Tuesday in the form of the September US resale sales and PPI data. Of course, both of those slightly stale, but nonetheless will continue to play a role in shaping expectations for that December FOMC meeting, which is really where attention is now starting to turn in terms of the next major catalyst for financial markets. Elsewhere, we're expecting the RBNZ to deliver a 25 basis point rate cut in the early hours of Wednesday morning. We also, of course, have the budget here in the UK, where Chancellor Rachel Reeves is likely to deliver significant tax hikes, possibly as much as 30 to 35 billion pounds worth of revenue raising measures. There will also be additional spending, potentially to the tune of 10 billion quid, with things like the two-child benefit cap to be raised as well. So that's, of course, the pivotal focus for sterling-denominated assets as we move through the week. And just one last thing, of course, with it being Thanksgiving, a lot of participants are going to be out of the market, so trading conditions are likely to be substantially thinner than usual. And the real question is, does that pick up? I think a lot of participants, it has been quite a bruising year, quite a tiring year. I can speak from personal experience on that front. And I think a lot of participants will be starting to look at Thanksgiving as a sort of synthetic year end. So we are potentially looking at much thinner and potentially more volatile trading conditions from now through to the end of December.